Welcome back, everyone. Today, we are bringing you a comprehensive financial analysis of Broadcom's spectacular Q4 and full fiscal year 2025 results. Broadcom continues to demonstrate why it's a titan in both the semiconductor and infrastructure software spaces, with AI driving historic growth metrics. Before we dive deep into the charts and numbers, please make sure to like this video and subscribe to our channel for more professional tech and financial breakdowns. Let's get started. Broadcom's fiscal quarter ending November 2nd, 2025, delivered record-breaking financial results, driven predominantly by a massive surge in AI semiconductor revenue. As highlighted in this overview, Broadcom's Q4 revenue reached a remarkable $18 billion. This represents a robust 28% increase year over year. Even more impressive is the adjusted EBITDA, which came in at $12.2 billion. This translates to an incredibly high EBITDA margin of 68%, showcasing Broadcom's unmatched operational efficiency. Free cash flow was also exceptionally strong, reaching $7.47 billion for the quarter. According to CEO Hock Tan, AI semiconductor revenue alone increased by 74% year over year, and management expects it to double in the first quarter of fiscal 2026 to $8.2 billion. This sets the stage for a transformative period for Broadcom, where its dual engines of custom AI accelerators and infrastructure software are firing on all cylinders. The overall theme for fiscal 2025 is clearly defined by rapid expansion and highly disciplined execution, positioning Broadcom as an indispensable partner for hyperscalers globally. Taking a closer look at the specific financial highlights for Q4 2025, the underlying fundamentals of Broadcom's business remain exceptionally strong. Net revenue of $18.015 billion represents a 28% increase over the $14 billion reported in Q4 of fiscal 2024. GAAP net income virtually doubled, surging 97% year over year to $8.518 billion, while GAAP diluted earnings per share hit $1.74. On a non-GAAP basis, which provides a clearer view of core operational performance, net income grew 39% to $9.714 billion. Non-GAAP diluted EPS reached $1.95, a solid 37% year-over-year increase. The adjusted EBITDA of $12.218 billion, representing 68% of revenue, illustrates Broadcom's incredible pricing power and cost management. Furthermore, the company generated $7.703 billion in cash from operations, supporting a free cash flow of $7.466 billion, which is 41% of total revenue. Broadcom ended the quarter with a formidable cash balance of over $16 billion, enabling a 10% sequential increase in their quarterly dividend to 65 cents per share. These metrics confirm a business operating at absolute peak performance. The trajectory of Broadcom's quarterly revenue demonstrates a consistent and accelerating growth curve throughout fiscal year 2025. Looking at the 5-quarter trend line, we can see revenue steadily climbing from $14 billion in Q4 of fiscal 2024 to $15 billion in Q1 of 2025. The company maintained a run rate of around $16 billion through the second and third quarters before experiencing a massive breakout in the fourth quarter to a record $18.015 billion. This jump represents a 13% sequential increase and a 28% year-over-year growth, making it the highest quarterly revenue in Broadcom's history. For the full fiscal year 2025, total revenue reached $63.887 billion, up 24% from the $51.5 billion reported in fiscal 2024. This growth is a testament to the immense, sustained demand across both their semiconductor and software divisions. Looking ahead to the first quarter of fiscal 2026, Broadcom has guided for approximately $19.1 billion in revenue. If achieved, this would mark another 28% year-over-year expansion, proving that the company's growth momentum is far from peaking and that its strategic investments are continuing to pay off handsomely. The primary engine behind Broadcom's recent outperformance is undeniably its AI semiconductor business. During Q4 of fiscal 2025, AI semiconductor revenue accelerated sharply, surging by an astonishing 74% year over year. This explosive growth is powered by two main pillars: custom AI accelerators, and Ethernet AI networking switches. Broadcom designs custom XPUs for the world's largest hyperscalers, creating a proprietary moat that enables tailored, high-performance computing solutions. In the networking domain, Broadcom's Tomahawk and Jericho switches absolutely dominate AI cluster connectivity, with Ethernet increasingly becoming the preferred standard over InfiniBand for scale-out AI infrastructure. CEO Hock Tan has highlighted that primary AI customers are deploying these technologies at massive hyperscale levels. The momentum here is so strong that Broadcom is guiding for Q1 fiscal 2026 AI semiconductor revenue to hit $8.2 billion. That would represent a doubling of revenue year over year, driven by the ramp-up of next-generation custom accelerators and expanded AI switch deployments. As hyperscaler capital expenditures continue to accelerate globally, Broadcom's custom chip business is perfectly positioned to capture a massive share of this expanding addressable market, solidifying its role as an AI infrastructure leader. Broadcom's business model is unique due to its powerful combination of semiconductor solutions and infrastructure software. This chart provides a clear breakdown of how both segments contributed to the record Q4 revenue of $18.015 billion. The Semiconductor Solutions segment remains the largest piece of the pie, generating $11.072 billion in the quarter. This segment accounts for 61% of total revenue and grew by an impressive 35% year over year, largely fueled by the AI accelerator and networking demand we just discussed. For the full year, this segment brought in nearly $37 billion. On the other side, the infrastructure software segment generated $6.943 billion, representing 39% of total quarterly revenue. This segment grew by 19% year over year, bringing its full year total to over $27 billion. The growth in infrastructure software demonstrates the immense success of Broadcom's integration of VMware, which continues to deliver strong recurring revenue streams. The synergy between these two distinct businesses allows Broadcom to capture value across the entire data center stack, providing a balanced, diversified, and highly profitable growth profile that very few technology companies can match. Profitability is where Broadcom truly separates itself from its peers, as evidenced by its record-adjusted EBITDA figures. For the full fiscal year 2025, Broadcom achieved a staggering $43.004 billion in adjusted EBITDA. This is a 35% increase over the $31.89 billion generated in fiscal 2024. In the fourth quarter alone, adjusted EBITDA reached $12.218 billion, representing an incredibly high margin of 68%. This metric highlights Broadcom's rigorous operational discipline and its ability to seamlessly integrate massive acquisitions like VMware while immediately expanding margins. Free cash flow generation is equally phenomenal. Full-year free cash flow hit $26.914 billion, up 39% year over year, while Q4 free cash flow stood at $7.466 billion, representing a 41% free cash flow margin. Looking at non-GAAP operating income, the company generated $11.92 billion in Q4 and nearly $42 billion for the full year. Broadcom is guiding for an adjusted EBITDA margin of approximately 67% in Q1 of fiscal 2026, translating to roughly $12.8 billion in absolute EBITDA. This marginal compression reflects necessary investments in the upcoming AI ramp, but the absolute dollar growth remains breathtaking. Analyzing Broadcom's earnings per share provides further evidence of the company's remarkable value creation. In the fourth quarter, GAAP diluted EPS surged 93% year over year to $1.74. This GAAP figure was materially boosted by a $1.649 billion tax benefit resulting from the lapse of a statute of limitations. For the full fiscal year 2025, GAAP EPS reached $4.77, an astounding 288% increase over fiscal 2024. This massive leap was also aided by lower amortization of VMware acquisition intangibles. Turning to the non-GAAP metrics, which investors rely on for core operational trends, Q4 non-GAAP EPS was $1.95, up 37% year over year. For the full year, non-GAAP EPS grew 40% to $6.82. Q4 GAAP net income reached $8.518 billion, a 97% jump, while full-year non-GAAP net income reached $33.728 billion, a 42% increase. The massive spread between GAAP and non-GAAP figures is typical for Broadcom given its acquisitive nature, but the aggressive upward trajectory of both metrics clearly validates the company's strategy of acquiring, optimizing, and scaling critical technology assets. Taking a comprehensive look at the full-year fiscal 2025 performance, Broadcom has delivered unparalleled results across its entire profit and loss statement. Net revenue for the year reached $63.887 billion, a 24% increase over fiscal 2024. This top-line growth was effectively translated into massive bottom-line expansion. Gross margin for the year grew 33% to $43.294 billion. GAAP operating income saw a massive 89% jump, reaching $25.484 billion, up from $13.46 billion in the prior year. The most striking increase is seen in GAAP net income, which exploded by 292% to $23.126 billion. Even when accounting for acquisition-related amortization and one-time tax benefits, the non-GAAP net income still grew by a robust 42% to $33.728 billion. Adjusted EBITDA increased 35% to $43 billion. This full-year snapshot proves that Broadcom's strategy of pairing custom silicon leadership with dominant infrastructure software is a recipe for tremendous scale. By tightly controlling operating expenses while experiencing surging demand in high-margin AI products, Broadcom has engineered a financial profile that generates massive, reliable cash flows for its shareholders quarter after quarter. Broadcom's ability to generate exceptional capital is arguably its most attractive feature for long-term investors. In the fourth quarter, cash from operations reached $7.703 billion, up 37% year over year. Free cash flow for the quarter was $7.466 billion, representing a massive 41% of total revenue. For the full fiscal year 2025, cash from operations totaled $27.537 billion, while full-year free cash flow hit $26.914 billion, a 39% increase over the previous year. What makes this cash generation so impressive is Broadcom's highly efficient asset-light model. The company's capital expenditures for the entire year were just $623 million, with Q4 CapEx at a mere $237 million. This low capital intensity allows the vast majority of operating cash to flow directly to the bottom line. Broadcom utilized this massive cash haul to pay out $11.142 billion in dividends during the year. They also aggressively repaid $18.478 billion in debt while securing $15.66 billion in new borrowings. Despite these massive cash outflows for dividends and debt reduction, Broadcom still managed to end the fiscal year with over $16 billion in cash and equivalents, up 73% from the prior year. Broadcom's balance sheet as of November 2nd, 2025, reflects the sheer scale and strategic maneuvers of the company over the past year. Total assets have grown to $171 billion. A significant portion of this is tied to the VMware acquisition, with goodwill standing at $97.8 billion and net intangible assets at $32.2 billion. Total current assets have surged 61% year over year to $31.57 billion, supported by the massive 73% increase in cash and equivalents to $16.178 billion. On the liabilities side, Broadcom has been actively managing the debt taken on for the VMware deal. Long-term debt has been reduced from over $66 billion in November 2024 to $61.984 billion today, reflecting disciplined debt paydowns. Total stockholders' equity has increased by a robust 20%, growing from $67.6 billion to $81.29 billion. This balance sheet demonstrates Broadcom's capacity to absorb massive transformational acquisitions, digest the associated debt rapidly using its immense free cash flow, and continually build shareholder equity. The strong liquidity position of over $16 billion in cash ensures the company has more than enough capital to fund its operations, growing dividends, and future strategic initiatives without stretching its financial health. For institutional investors, understanding the bridge between GAAP and non-GAAP metrics is crucial for valuing Broadcom. This reconciliation table for Q4 and the full fiscal year 2025 outlines the key adjustments. The largest adjustments relate to the amortization of intangible assets from acquisitions, primarily VMware. In Q4, $1.54 billion in amortization and $237 million in stock-based compensation were added back to gross margin, bringing the non-GAAP gross margin to $14 billion or 78%. Research and development expenses were adjusted down by $1.45 billion for stock-based compensation, while SG&A was adjusted for $500 million in stock-based compensation and minor acquisition costs. Ultimately, total operating expenses were adjusted downward by $2.6 billion. This takes Q4 GAAP operating income of $7.5 billion up to a non-GAAP operating income of $11.9 billion. For net income, adjustments for amortization and stock-based compensation bridge the gap from $8.5 billion GAAP to $9.7 billion non-GAAP. It is important to note that the FY2025 Q4 GAAP net income was materially boosted by a $1.649 billion tax benefit. By stripping away these non-cash amortization charges and stock-based compensation, the non-GAAP figures reveal the true massive cash-generating power of Broadcom's core operations. Broadcom's commitment to returning capital to shareholders is a cornerstone of its investment thesis. The board has announced a 10% increase to the quarterly dividend, raising it to 65 cents per share. This marks the 15th consecutive year of annual dividend increases since the program was initiated in fiscal 2011. The target annual dividend for fiscal 2026 is now a record $2.60 per share. In fiscal 2025 alone, Broadcom paid out $11.142 billion in dividends, the largest annual payout in company history and a 14% increase over the prior year. CFO Kirsten Spears noted that this increase reflects deep confidence in the sustained growth of the company's operating cash flows. In addition to dividends, Broadcom maintains an active stock repurchase program, buying back $2.45 billion in common stock during fiscal 2025, alongside $3.86 billion in share-based award withholdings. Crucially, this aggressive capital return strategy is highly sustainable. Broadcom's free cash flow of nearly $27 billion in fiscal 2025 provides ample coverage for the new dividend rate, which will cost approximately $12.3 billion a year. This leaves significant excess cash for continued debt reduction and reinvestment. Following the massive VMware acquisition, which added approximately $37.5 billion in new debt in late 2023, Broadcom has executed an aggressive deleveraging strategy. As of November 2025, long-term debt stands at $61.984 billion, down from over $66 billion a year prior. Short-term debt is at $3.15 billion. During fiscal 2025, the company secured $15.66 billion in new borrowings while executing massive repayments of $18.478 billion, resulting in a net debt reduction of approximately $2.8 billion. In the fourth quarter alone, Broadcom made repayments of $3.6 billion in term loans and commercial paper. This aggressive paydown schedule is already yielding tangible financial benefits. Interest expense for the year declined by 19%, dropping from nearly $4 billion in fiscal 2024 to $3.2 billion in fiscal 2025. Despite this aggressive deleveraging, Broadcom's liquidity remains exceptional, with cash and equivalents growing by $6.8 billion year over year to $16.178 billion. This debt management profile is exactly what credit agencies and equity investors want to see: a management team that uses cheap debt to acquire highly accretive assets and then uses the resulting gushing cash flows to rapidly de-risk the balance sheet. Looking forward, Broadcom's guidance for the first quarter of fiscal 2026 indicates that its hypergrowth phase is continuing to accelerate. the company projects Q1 revenue of approximately $19.1 billion. This would represent a stunning 28% year-over-year increase and a 6% sequential rise from the record Q4 we just analyzed. The absolute star of this guidance is the AI Semiconductor segment, which is expected to double year-over-year to $8.2 billion in the first quarter alone. This incredible ramp is being driven by intense demand for both custom AI accelerators and Ethernet AI networking switches as hyperscalers continue their massive infrastructure buildouts. Broadcom is guiding for an adjusted EBITDA margin of approximately 67%, translating to roughly $12.8 billion in absolute EBITDA. While this is a marginal compression from the 68% seen in Q4, it reflects the necessary upfront investments to support this massive AI product ramp. CEO Hock Tan has expressed extreme confidence in demand visibility, stating that the momentum is continuing forcefully into Q1. For investors, this guidance confirms that Broadcom's AI narrative is not just intact, but is actually gaining speed as we move deeper into 2026. To summarize this remarkable earnings report, there are 6 key takeaways that define Broadcom's current position. First, the company achieved record Q4 and full-year revenue of $18 billion and $63.8 billion respectively, driven by intense AI and software demand. Second, AI semiconductor revenue is the undisputed growth engine, growing 74% in Q4 and projected to double year-over-year in Q1 to $8.2 billion. Third, Broadcom's profitability is elite, generating a record $43 billion in adjusted EBITDA for the year, with margins approaching 70%, yielding exceptional free cash flow. Fourth, management's confidence is reflected in a 10% dividend increase, marking the 15th consecutive year of dividend hikes. Fifth, the guidance for Q1 2026 points to continued acceleration, with revenue expected to hit $19.1 billion. And finally, the VMware integration has been a resounding success, driving infrastructure software revenue up 19% and generating the cash needed to aggressively pay down acquisition debt while building a $16 billion cash pile. Broadcom has cemented its status as an absolute powerhouse in the AI and enterprise technology sectors, combining structural top-line growth with unmatched operational discipline and cash generation. That wraps up our detailed breakdown of Broadcom's spectacular Q4 and fiscal year 2025 financial results. The sheer scale of their AI growth and cash generation is truly remarkable. We will continue to track their progress as they aim for those massive Q1 targets. If you found this institutional-grade analysis helpful, please remember to like the video, share your thoughts in the comments below, and subscribe to the channel for more financial breakdowns. Thank you for watching, and we'll see you in the next one.